much for that. Not that we are saying we are dozing off, but I think we are. It's a good
charges us up, hormones, yeah.
Recharges us. Sanjay Parekh is with us, founder and CIO at Sohum Asset Managers. Sanjay, good to have you with us here on the program as always. Appreciate your time, and it's good to speak with you as well, Sanjay. I was looking through your portfolio and I found one stock which perhaps is new. Maybe there are more. I could spot Oswal Pumps, which is also a recent listing. Sanjay, which finds its way into the portfolio. So tell us a little bit about it. And it's like, I mean, there's Shakti Pumps, which I guess is in the same space. Why do you like this one? Why do you own it?
Yeah, so one is, this company, as you said, got listed. IPO price was 614. Immediately after the listing, we could add at lower levels, so that was good. Basically, the opportunity in this segment is very, very large. There are almost, the opportunity can be as large as 11 crore pumps, either not having pumps, farmers not having pumps, or they are running on diesel sets, or the pumps with the grid connected, which can eventually move to solar pumps. So the pump manufacturing part was smaller, but with the solar modules getting attached, the opportunity is pretty large, because an average pump for a 3 HP size is around 2 lakh rupees. And this player is completely integrated. It makes its pumps, it makes its motors, the connectors, and the module. And last year, before raising the capital, they had a 400 crore net worth and 260 crore was the profit last year. So that was as high as that for ROE. So the return ratios were very, very good. Even after the capital raise, even if you take lower margin, the return ratios can be in mid 25% or so. So the fixed capital intensity is low, but the working capital intensity is high because it's B2G. The dependence on state government for payment is there. And there it will be ranging from 150 to 160 days. But the fixed asset turn can be even 10 times, So the return ratios are good. The opportunity is large. This player is completely integrated. There will be on net cash, and it will only get better despite the need for working capital, and the growth will be very high. So, and it's a very large player, almost the second largest player, and extremely efficiently run. And as I said, integration, because of the integrated nature that they have, and they want to keep doing better and better, the margins are as high as 30%. But even if you take 25, 26% as a sustainable EBITDA margin, there is a clear runway for growth. And the market cap when we bought was 7,000 crores. Hopefully this year they'll do 500 crore EBITDA, and next year 700 crore EBITDA. So in this market, we found it to have better character of the business and very reasonable valuation. And the risk, as he said, is it's a B2G, so dependence on government for new orders and continuing subsidies, and the payments that you need to collect from them is always there.
Hi, Sanjay. Great to have you on. Good afternoon. I wanted to discuss two of your holdings and whether recent events at all change your view in any way, or what the investment case continues to be. So one is Axis Bank, and we saw what happened with this whole technical adjustment and the way they've changed their NPA recognition process. Whether that kind of made you rethink it all, because I think it's one of your largest banking holdings. And the other is Bajaj Finance. Nothing wrong with the growth, but today the market's very upset, saying, but they're guiding for some stress in MSME, in two-wheelers, etc. So pretty sharp reaction. You think it's overdone on Bajaj Finance? But what's your sense? And a quick word on Axis as well.
So Axis, yes. I don't think it was technical write-off in all jargons. According to us, it's a clear recognition of the NPA that they should have done, and they rightly did it. More than that, I think, the balance sheet is very, very strong. That's not a problem. They're actually very, very conservative. They have a buffer which they're not using it. But just that growth, the trinity of growth, getting the capital, since the CASA, right, and, the NIMs, the whole trio, it has to fall in place. And that is where, and then, of course, also no asset quality not deteriorating. So what our sense is that they are clearly tilting towards asset quality not deteriorating and taking a view that it's okay to have less growth or less profitable growth. So that is where growth is not as much as they should have been. And that is where it's a little disappointing. But I think, that, as I said, asset quality is in place. We are very hopeful that slowly and steadily the growth will revive. And then ROEs would look better. The most important thing is what is in the price. You get Axis Bank at 1.3 times, which is almost very, very reasonable. And that's where we would want to, even if you take, 1.6, 1.7, there's room to money to be made. And hence we own 4% of it, which will continue to.
And Bajaj, any concerns, or you think this is a 1 quarter, not too much to...
Bajaj Finance was, certainly from the lows, you saw a run-up, which was quite well. It's done exceptionally well, in fact. So, now valuations are not that cheap, You take, you're just looking at 24 times on 27, you get a target price of 10,000. On price to book is also around 4.3, 4.4 times. So on that 1,000 rupees of target price. So it is not cheap. Yes, they said that growth would be in the range of 23-24%. And MSME and SME, they're very, very transparent and honest. And that's where they said we want to watch it. So we would, they're the best in class of governance, transparency, which is very, very good. And they did say that give us 1 quarter and we'll talk about growth and asset quality as well. But for now, it looks this way. So we are okay. We have a small weight because we reduced the weight because of valuation, not because of the results earlier. And at the right time, we'll actually increase our exposure to Bajaj Finance, but that would be much lower, not at the current price.
Okay, got that. Sanjay, just hang on. We'll try and squeeze in some more questions in just a bit. But quickly, let's head across to our FNO desk and see what's the latest action like. Mangalam.
Well, there is a fair amount of